Well, well, well. How's the markets looking? How is the pension system looking? I talk a lot about the pension system in America. And aside from the fact that many, if not, yeah, probably most, I would say is a safe way to put this, most pensions are essentially unfunded liabilities. Kind of like our own retirement system, 401ks, not necessarily 401ks, Social Security, Medicaid, all those things. Those are all unfunded liabilities. The last thing you'd expect to be an unfunded liability is your pension. And I forgot who said it, where the old saying came from, but it's something like pensions are great until it's time to start taking out yours, until it's time for you to start collecting. Because you collect, everything seems good, and then all of a sudden, bang, sorry, you can't collect anymore. We need to work a deal out with the pension fund management, the company that was handling this. We got to, such and such state pension fund or whatever it is. We got to relook at things. The money's just not there. And I notice every time I hear one of these stories, nowhere do they say it's been invested into different things that have failed miserably. And that is a big reason why your pension is getting smashed right now. And we're sending you this letter telling you we need to rework this deal out because the monthly payment you're getting needs to be cut in half, by the way. No one ever seems to say part of the problem at the very least, even to say part of the problem, is that we've invested this like everybody has always done, but those investments turned sour. My question would be, why wouldn't you, because it's a pension, it's someone's retirement, like for example, Social Security. You put in your whole life, and at the ripe age of what's going to ultimately be 65 for everybody, you can take out your Social Security benefits, start living off it, which doesn't amount to much. But you see, they haven't taken Social Security and said, all right, we're going to invest it in the stock market or some certain market overseas, Japanese debt or European debt. Maybe I shouldn't use the word debt because that would really raise a red flag, wouldn't it? Because that's essentially what you're investing in. Let me say it the way they would say it. We took this pension money and we invested it overseas in the markets over there, in the Japanese markets. And they sucked. They sucked. So we're moving them around. We're going to invest in some other markets. My question is, why are you doing that at all? You see, there has to be, and it doesn't have to be a market. There's always something out there that gives you at least a teeny tiny percentage interest on your money. There's always something. It's always safe. When markets crash, these things usually just skate it out. No big deal. Having said that, as crazy as what I'm about to tell you sounds, this is the truth. You take all this pension money and over the years, we've been investing in the markets and blah, 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 blah. And on paper, up until that point, what I just said a minute ago looks like crap. Because they're going to say, look how much money we made based off of this market investment. What I'm suggesting is you might have been better freaking off just setting the cash on the side. Every money, piece of dollars, cents, pennies that come in on that pension sits in a bank account collecting nothing. But it's there and it's safe because it's there and no one's touched it. So that when the day comes when they bragged about how awesome, look at how much this pension fund has gained since so-and-so was in charge. And when so-and-so was in charge of that company, big time multi-million-dollar salary because he's such a big shot. He's done so well investing all of your money for you. And then the markets turn south, and Mr. Big Shot is gone. Faster than you, or as an old timer once told me, quicker than you can shake a stick at it, much less lick it. Don't know what the hell that means to this day. But an old timer told me that. Faster than you can shake a stick at it, much less lick it. Look what? The stick or the thing that you're talking about? I'm not sure. So I'm suggesting that if they just took the money all of these years and just socked it away, under the bed, so to speak, risk is zero. The money's there. It's always going to be there. So if you built up all these models of, okay, pension, how much comes in, where's it coming from? Okay, we can very faithfully give you an amount. As soon as you start working, this is what your pension will be based off of this. And you don't have to worry about markets crashing. You don't have to wonder, how did Japan do? Our pension fund in America was actually invested into the one in Japan, their market, and in Europe, and in the UK specifically after Brexit. Oh my God. So no one ever talks about pensions being destroyed, not just because of unfunded liabilities, but because what it was invested in took a complete dump. And as Greg Manarino has said many a times, money does not disappear. The pension money, the money you put in all this time, and when I say you, some of you people who collect pensions, you didn't have to put in a dime. It may have been us taxpayers. It may have been some other part of the company, whatever it is. The money that was coming in, you got that money. You didn't have to pay a dime out of your own pocket, so to speak. Some of you do, some of you don't. But the point being, make it simple so I can get on with this article I want to read you. Nobody talks about the losses in the investment of that pension fund. What was it invested in? You do not hear this in the news stories. All you hear is there's a pension problem again today, a such and such pension, and they're trying to work with the union on that. Okay, so we understand there's an issue, but is there another massive issue that it lost a ton of money? No one seems to ask that question. Where was it at its peak, and where's it at now, and why was it there, and why is it here now? You're going to hear the same thing, because pensions are invested in the markets. So when you have the likes of Jamie Dimon and Lloyd Blankfein, the big billionaire club now that they've joined last year they joined. Both of them became billionaires. They know what the markets are going to do way before. They're not telling you or your client or your freaking hedge fund that's investing your pension fund or anything else. How do you think they're becoming billionaires? They're taking your money, blame it on this fictitious thing called the market, like it's this being that's alive. The market has come down today. The market is not looking good. The market came down 7 points today based off of one country deciding it wants to leave the European Union. There's 27 other countries. Big deal. Oh, the market did not take that very well. The market didn't take it? So you can see why they want your guns pretty bad. You can see why they really want them. Because they know people are going to have nothing left to lose, because they're going to lose it. And as I say, when you have nothing else left to lose, people lose it. They want blood. That's why the Social Security Administration, these little offices, Veterans Affairs and whatnot, now have armed policia, armed agents. Who's calling that phone? Because we don't usually have anyone that's a number. Stand by. So I thought that phone call was, some spammy nonsense, which technically speaking it was. But, I was expecting the automated nonsense. Pick it up. Hello. Yellow. Yep, silent call. Oh, hey, hello. I'm so-and-so with the, I almost could have swore you said something with the, with the United something police pension fund. I was, hold on. My mind heard it wrong. Some kind of donation for some police something or another fund, not a pension fund. I could have swore I heard that on that phone just now. Bill, yeah, listen, not interested. Thanks. Why? Because my people are waiting on me to finish this video. And some of them complain that I talk too long for long periods of time, of course. I got to get back to them, Bill. Thanks. So anyways, I'm done with the pension speech. Let's look at, speaking of pensions, Zero Hedge. Back in December 2014, when we first learned that Japan was willing to risk hundreds of billions of Japanese pensions to boost and prop up the domestic stock market. The only true arrow of Abenomics, which Abe is their, I think that's how you pronounce his last name, it's their prime minister, and they call what he's been doing Abenomics, as in economics that are horrible. So just call them Abenomics. Kind of like Obamacare, worst healthcare system on the entire face of the earth. It's not called healthcare, it's called Obamacare. Same kind of principle here, Abenomics or Abenomics. So it says the only true arrow of Abenomics by shifting cash out of bonds and into stocks in the country's gargantuan and world's biggest $1.4 trillion government pension fund, investment pension fund, I should say, known as the GPIF. We wrote that the GPIF has a warning for Japan citizens. Abenomics better work or your pensions are toast. As the Wall Street Journal wrote then, Japan's $1.1 trillion then government pension fund is betting that a long-term recovery and rising corporate profits will push Tokyo stock prices higher, helping the fund increase returns for the nation's retirees. Mr. Abe has pushed for the fund to become a more aggressive and sophisticated investor. The fund decided in October to shift its portfolio to seek higher returns, slashing its target allocation to domestic bonds almost in half while nearly doubling that of domestic and foreign equities. Domestic and foreign equities, like the UK, the EU, that kind of stuff. Kind of like what MF Global was betting on with their clients' money out of their allocated accounts they weren't supposed to touch. They took it out, bet on European debt, lost the bet, instant bankruptcy, have a nice day. Investors or their customers, where'd my money go? My account, what the hell happened? Mr. Corzine, can you answer the question in a hearing? I'd like to answer that question. This is what he said. Paraphrasing, but this is what he said. I would like to answer that question. I appreciate you guys all being here to ask me these questions, but I no longer work at the company anymore. So I don't have access to those emails and that type of data anymore, so I can't answer that. That was his response. Why was he not put in jail? The same reason why Hillary Clinton is not being put in jail, like I said would happen. She's part of the club. FBI, who appoints these people, the executive branch of the club, appoints people that will always find them not guilty, that will always find their enemies or opponents guilty of things. Same reason applies. So, back to my story here, first of all, before I make this video way too long. Expectations that Mr. Abe's policies will succeed have already helped double Japan's benchmark stock index since late 2002. So doing that's made the stock market rise. Again, but a rising stock market, what about the pensioners? What about those people? Further gains would no doubt benefit the GPIF's 23.9 trillion yen or 202 billion US dollars worth of domestic stock portfolio. Oops. Less than 2 years later, Abenomics is in tatters. The Japanese economy yo-yos from recession to negligible growth, while the stock market has slid into bear market territory, having lost a quarter from its recent highs as a result of a surge in the yen, as the Bank of Japan has largely wiped out all of its credibility with the now widely mocked decision to unleash negative rates. Keeping in mind, this is a Western economy, this is a Western country, this is not by even any way you shake a stick at it, is not a third world country. This is one of our trading partners, has a huge economy, etc. So just let that sink in, because you're going to have other issues, again, like we're seeing in the EU, and ultimately it comes back home to USA. And you better freaking be prepared when it comes here, because there will not, under any circumstances, be a do-over. And you can't press pause. Like my kids, I love my kids when they come down and playing hide and seek or something. Pause. Daddy, it's pause. No, I'm hiding and I'm about to catch you. Don't try that. I'm not answering. Pause, Daddy. Mr. Prime Minister, pause. Markets are crashing. Pause the pension investment. Pause. Oh, sorry, those things called high-frequency traders. Ooh. Yeah, they did a number on you guys today. Your pension fund. Ooh. But we can't say that out loud. We'll just say it's an unfunded liability and it needs more money. Not we lost an enormous amount of it. So moving on. And while all of this, the above, is terrible news for Japan, whose demographic implosion assures a deflationary black hole no matter how much money the Bank of Japan prints, those most impacted by Abe's reckless decision, as would be expected, just like it's going to happen in America, are the country's pensioners, the older folks. Because as we concluded in December 2014, unfortunately for Japan and its tens of millions of pensioners, the only news here is simple. The entire country is now held hostage by Japan's last gasp attempt to prove monetarist and Keynesian policies work. Because said otherwise, Abenomics better work or else your pensions are toast. That's what they did say. That's why I love Zero Hedge. They are on top of stuff, financial for sure. Sadly, this process is now in play. Last week, Morgan Stanley's Yoi Aoya calculated that after suffering 5 trillion yen in losses in the year ended March 31st, the GPIF has started off the new year with another anti-bang, losing another 4.4 trillion yen in losses in the first quarter alone, or a total of just under $100 billion. So with Abenomics careening off the cliff and headed for a traumatic death, and with Kuroda having become the laughingstock of central bank circles, has Japan finally learned its lesson? Will the GPIF rotate out of money-losing stocks and back into bonds, which are currently trading at record high prices? According to Morgan Stanley, the answer is not a chance. Morgan Stanley, did you shake your magic 8-ball when you read that answer? Not a chance. For the simple reason that as a result of an upcoming asset rebalancing, the GPIF will have no choice but to buy even more money-losing stocks. As Bloomberg reports, because shares held by Japan's $1.4 trillion government pension investment fund have suffered such large losses, it will need to add to those holdings to meet targets for their weighting while selling sovereign bonds whose value has soared. Assuming no reweighting was done since January 1st, GPIF will need to buy 4.2 trillion yen, or $41 billion, of local stocks and then sell 9.8 trillion yen of Japanese government bonds to reach its goals. The brokerage didn't give a time frame for this buying. Quote, many foreigners think the pension rebalancing story is over. But if we see any confirmation of more buying, it could help sentiment, at least in terms of pensions being there to support the downside. End quote. This may be good news for the short term, as a third party helps the Bank of Japan in pushing stocks higher, but in the longer run, it simply guarantees even more losses as the yen surge continues on the back of the Japanese economy that has lost virtually all levers to grow, including currency debasement. It also means that once the rebalancing dry powder is gone, so to speak, there will be that much less in the money on the sidelines after the upcoming buying spree. Others, most notably those who will be selling all they can to the giant pension fund, are delighted. GPIF rebalancing, quote, is going to put a floor on stock declines in a market that's full of uncertainty. It's big, said Koichi Kuros, Tokyo-based chief market strategist at Resona Bank Ltd. Quote, it's also important for the Bank of Japan. A welcome story for them. End quote. The mechanics of the rebalancing are simple. Japanese stocks probably accounted for about 22% of GPIF's holdings at the end of last month, while domestic debt made up 43% of assets, according to Morgan Stanley. He based his calculations on GPIF's 23% weighting in domestic shares and 38% allocation to local bonds at the end of December and adjusted for market moves since then. Things, and to let you know, when I talked about they're kind of like investing overseas too, this is a secondary article from a Zero Hedge, which I've just got a couple of headlines off of it. Domino number 1 out of 3 that have fallen. Standard Life investment property drops 15%. Trading in fund is suspended. Oh, that's nice. Domino number 2. Aviva suspends trading on Aviva Investors Property Trust. Keeping in mind, this is all property related. Webbot said recently, and even a month to 2 months ago, real estate, get ready for the bad news. Generally speaking, get ready for bad news in real estate. This is bad news. First one, Standard Life investment property drops 15%. Trading fund suspended. And he says, as a side note on that one, in a stark flashback to the catalytic event that ultimately brought down Bear Stearns in 2008 and subsequently unleashed the greatest financial crisis in history, last night we reported that Standard Life has been forced to stop retail investors selling out of one of the UK's largest property funds for at least 28 days after rapid cash outflows were sparked by fears over falling real estate values. So imagine you're the investor. I've got my money into this fund. It's taking a crap. I'm taking my losses. I know I made a bad decision, but I'm taking my freaking losses and I'm getting out. Sorry, sir. That is incorrect. You can't get out for at least 28 days. Your money is stuck right there. Have a nice day. Oh, but if you've invested in silver all those years or gold all those years, ooh, you would be sitting pretty and you could do anything you want with it whenever you want with it. You want to sell it? You want to hold it? You want to trade it? No problem there. Plenty of buyers on the market. It's not in the system. Keyword, as I've always said, it's in their system. If your stuff is in their system, it's not yours. You may think it's yours. It's not yours, and you will be cleaned out. Number 2, Domino. Aviva suspends trading on Aviva Investors Property Trust. Another one. And for the third and final one, M&G suspends trading in M&G Property Portfolio Fund. As Bloomberg reports, M&G suspends trading according to the statement on their website. Investor redemptions in the fund have risen markedly because of the high levels of uncertainty in the UK commercial property market since the outcome of the European Union referendum. Again, let's blame this on the EU referendum, leaving. Webbot, right again. And I don't want to dedicate a whole video. Maybe I should. It probably needs its own video. Webbot, silver, Bitcoin. It said it since late last year when Bitcoin made its big move past 400 and all that. I need to do a separate video. This will be a short one though. Take care.